Hey there everyone, welcome back to Crypto in 5. Guys, this market is absolutely mind-blowing right now. Did you know that while we're all staring at Bitcoin, wondering if it can hold the $90,000 level, gold over in the traditional market has quietly smashed through the $4,500 mark. It's a total study in contrasts, literally night and day. On one hand, you've got gold shining bright with safe haven capital flooding in and prices hitting new highs. On the other hand, our favorite Bitcoin seems to be ignoring every macro tailwind out there, acting like you do you. I'm just exhausted. Ever since that failed attempt to break $90K on Monday, the price action has been totally limp. So, here's the bottom line. If you're currently holding or planning to buy the dip, you really need to watch this video until the very end. Because today, I've got some news that might keep you up at night. Based on the 5 latest core indicators, we might not just be seeing a minor correction, we could be standing on the edge of a major bear market heading into early 2026. I'm not just trying to be a doomer here. Today, we're letting the data speak for itself to break down why Bitcoin is all bark and no bite right now, strong on the surface, but fragile to the core. We'll dive into what the whales are doing, what institutions are thinking, and where that legendary lifeline actually sits. After watching this, you'll understand why now is definitely not the time for blind optimism. Alright, before we dive into the truth, let's get the usual disclaimer out of the way. Everything on this channel is purely for sharing my personal research and observations. It is not investment advice in any form. The crypto market is one of the highest risk casinos in the world. The volatility alone will make you question your life choices. Before you commit a single cent, make sure to do your own research. Remember, investing involves gains and losses, so protecting your capital is always priority number 1. Alright, seriousness aside, let's jump straight into the latest technical analysis. Everyone, take a look at the Bitcoin daily chart. You see that? That wick from Monday's attempt to hit $90K looks pretty ugly right now. That failed breakout was like having a full tank of gas, but stalling right before the finish line. To make matters worse, the price dropped further yesterday, losing the key support at $88,000. That's a very bad omen. Right now, we're facing continued downside risk in the short term. Looking down, the next trench we need to watch is around $85,000. If that doesn't hold, then I hate to say it, but the floor could drop straight to the $80,000 mark. You might ask, is there no chance for a bounce? Of course there is, but the problem is there's a dark cloud hanging over us. The zone between $88K and $90K is packed with sell orders from people just trying to break even and heavy resistance from bears. Every little bounce will likely get hammered down by folks looking for an exit. Unless, and I mean unless, some massive, unexpected bullish news hits that allows Bitcoin to break $90K on high volume and hold above it. Only then can we say this downtrend has been reversed. But as of now, do you think that's likely? Personally, I'm skeptical. Okay, technicals aside, let's move on to the main event for today. Why has market sentiment been so low lately? Why are professional reports warning of a bear market in 2026? I've summarized a deep dive analysis from B in Crypto and several professional firms, translating all that high-level, tongue-twisting jargon into plain English we can all understand. We're going to talk about these 5 death warrants that could dictate whether your portfolio grows or shrinks over the next year. First up, slowing demand growth. Sounds pretty ordinary, right? Let me put it another way. It's like owning a world-famous restaurant with a massive line outside, but if you look closer, people are just scrolling on their phones and taking selfies for social media. The number of people actually going inside to order a meal is dropping. Current data shows that apparent demand for Bitcoin is receding. What does that mean? It means the hard-hitting demand from people coming in with actual USD to buy spot Bitcoin has vanished. What's actually keeping Bitcoin at these high levels right now? It's inertia and high-leverage gamblers holding the line. Everyone is betting it'll keep going up, but there's no new buying power to push it. When leveraged longs realize they can't move the needle, that's when things get dangerous. Next, the second warning sign, and the one everyone cares about, spot ETF inflows have stalled. Remember 2024, when everyone treated US spot Bitcoin ETFs like a savior? Back then, big daddies like BlackRock and Fidelity were buying hundreds of millions or billions every day. It was like they were panic buying Bitcoin, like it was bottled water before a hurricane. But here's the kicker. By Q4 of 2025, these big players seem to have gotten tired. Data shows that ETF inflows have flattened out, and we've even seen net outflows on certain days. What does this mean? It means the most powerful structural buying force in this market is losing steam. Institutional buyers are smart. If they stop buying or start selling, don't you think they've smelled something fishy? When our strongest backup starts retreating, we retail investors really need to watch our backs. Moving on to the third point, which I find the scariest. The whales are quietly retreating. Specifically, we're talking about addresses holding between 100 and 1,000 BTC. In these reports, they're sometimes called dolphins or mid-sized whales. These people are usually the smartest money in the room, room, often hedge funds or OG crypto veterans. The latest charts show their holdings are undergoing a very noticeable decline. History doesn't repeat itself, but it often rhymes. Whenever this smart money starts quietly offloading at high prices, it's usually a precursor to a crash. The pros are jumping ship like rats on the Titanic, while the rest of the market is still dancing on deck. If you're still at the party, keep your head up the iceberg, maybe closer than you think. The fourth signal is all about market heat. Funding rates are dropping. Many of you might not know what funding rates are. Simply put, it's the interest traders pay to borrow money to go long. In a crazy bull market, everyone wants to go long, so funding rates skyrocket. People are desperate to pay interest just to buy in. But now, Bitcoin funding rates across major exchanges are steadily falling. What does this tell us? It shows that even the most degenerate leverage traders are starting to hesitate. People are no longer willing to pay high interest to open long positions. The passion for going long is cooling fast. When the market loses that oomph, breaking through overhead resistance becomes an uphill battle. Finally, the straw that breaks the camel's back, dropping below the 365-day moving average. In the investment world, we have a lifeline known as the bull-bear dividing line, the 365-day moving average MA. It represents the average entry price for everyone over the past year. According to the latest charts, Bitcoin's price has been consistently below this line. Historically, this is a very heavy signal. Every time Bitcoin enters a true bear market, it starts with a break below this line. It tells us that long-term momentum has completely weakened. It's like someone whose heart rate has dropped below normal. They might still be standing and talking, but something is seriously wrong internally. Hearing all this, do you feel a bit of a chill down your spine? Let's do a quick summary. If these 5 indicators continue to deteriorate, then a bear market in early 2026 is almost a done deal. So you're probably asking, if we really enter a bear market, how low will Bitcoin go? The Be in Crypto article mentioned a crucial number that you need to write down: Bitcoin's realized price. What is the realized price? It's an on-chain metric that basically means the average cost basis for all Bitcoin holders in the market. Where is that number right now? Around $56,000. In all previous bear cycles, Bitcoin's price floor usually returns to this average cost basis or even briefly dips below it. So if we really see a major crash in 2026, $56K is our final line of defense. Compared to the current $90K, that's another 30% to 40% of potential downside. Folks, this is exactly why I had to make this video today. We don't predict the market, but we must be prepared for all possibilities. Right now, Bitcoin is like a tightrope walker at 30,000 feet without a safety harness. He hasn't fallen yet, but the wind is picking up and the rope is starting to fray. So here is my take for today. First, strictly control your position size. Now is absolutely, positively not the time to go all in. If you're sitting on nice profits, taking some off the table in stages is always a smart move. Second, don't try to catch a falling knife. Until support levels like $85K or $80K are confirmed to hold, any drop could be a bottomless pit. Third, pay attention to macro indicators. If gold keeps soaring while Bitcoin stays weak, it shows that safe haven capital is making its choice, and we can't ignore that. Finally, I want to ask you all, after hearing these 5 warning signs, do you think a 2026 bear market is inevitable? Or do you think this is just the latest shakeout by the big players? Or have you already started quietly trimming your positions like the whales? Drop a comment below and let me know what you think. Let's get a discussion going. If you found today's analysis helpful, please make sure to like, subscribe, and hit the notification bell. This is Crypto in 5. See you in the next one. Bye.